Welcome back to Your Average Investor, the channel that looks at my journey through investing, budgeting and finance. Now again, it's been quite a few weeks since my last video, and that's because I've been trying to update the quality of the videos that I can produce. So over the course of the next few videos, you should see the quality improving, the editing improving, as well as hopefully the sound and lighting quality as well. This is something that I've been hoping to be able to do for a long time, and it's the fact that people have been watching my videos continually that has allowed me to reinvest the cash I've made from YouTube back into the channel to hopefully provide a better viewer experience from my channel. With that said and got out of the way, I thought it would be interesting today to hop back into my Trading 212 portfolio. Now, the last video on the channel looked at how much Trading 212 had actually paid me in free shares since I began investing as part of their share referral scheme. At that point though, we didn't really take too much of a look into my investment portfolio within Trading 212 or the companies and shares that I'm currently invested in. The value of my portfolio has increased about 50% since my last update, so hopefully you'll find this an interesting video to see the continued growth of my Trading 212 individual stocks and shares portfolio. With that said, let's hop into the Trading 212 portfolio and have a look at where my investments sit at the moment. Here we are then back inside my Trading 212 invest account. You'll be able to see on screen that the total value of my portfolio is currently sat at £2,800.12 from a total amount invested of £2,484.56. This gives me a rate of return of 12.7%, which equates to around £315 in capital growth. As always, we'll take a look at how this portfolio has grown over time, as well as the individual stocks and shares that I'm invested in. I opened this portfolio in May 2020, so it's not yet been open for a year, but you can see, looking at this year tracking graph, the rate that it's grown over that time, from £0 all the way to where it sits currently. We can further look down into the 3 months, and then the month, and this is one of the most interesting ones. You can see that despite me reinvesting throughout this time, it has traded fairly sideways of late. This is because the market dip of a week or so ago, which does see me lose around £200 in capital growth over that time, potentially £300 depending on where you look at. You can see here on February the 17th, I was up £612.69, equating to 29%, whereas now I'm up around £315 or 12.5%. This is largely because of the tech and EV pullback affecting companies like Apple, Tesla and Amazon as well, some of the largest holdings within my portfolio. Let's have a quick scroll through then and have a look at the individual stocks and shares that I'm currently invested in. I probably won't spend too long on each of these individual stocks and shares. I'll go through how much I've got in each of them, and I'll jump into a few particular ones to note some points of interest, just so these videos don't get too samey time after time. I'm currently invested in Alphabet Group, and I own 0.04 shares in the company, which equates to around £60. Currently up around 12%, or £6.44. Amazon is the next company, and as you can see at the moment I am down on Amazon around 2%. So we'll hop into Amazon and take a little bit more of a look at this. You can see at the bottom of the screen that I own 0.07 shares in Amazon, which equates to £155.66. Now the point of interest here is the rate of return. You can see that my overall return is negative £2.97 or 1.88%. However, if you look at the actual market gain or loss, you can see that I'm actually up £7.28, equating to around 4.68%. What this means is that since investing in Amazon, the company's value has actually increased around 4.6%. However, you can see below the market gain or loss the FX impact. This is something that Trading 212 added in the last 4 to 6 months, and it's really interesting to look at the effect that currency differentiation can have on the growth of your portfolio. Trading 212 further break this down by stating that currency exchange rate impacts the return on foreign investments. It suggests that a rising domestic currency means that foreign investments will have lower returns when converted back into the local currency. And in essence, what's happening here is the pound is strengthening and the dollar has been weakening of late. And what this means is that my investments within dollar-denominated companies have actually reduced in value when being converted back into the more strong pound. This doesn't necessarily worry me at the moment. I do think that over the next 20 to 30 years, the dollar will go from strength to strength, as history would suggest. While the FX impact does look negative on my rate of return, it does mean that I can invest in American companies at a cheaper rate at the moment, and hopefully as the currency begins to strengthen, these rates of returns will strengthen as well. We can then see I'm invested in Apple, and I currently own 3 shares valued at £268.71. And again, here I'm down around negative 2.5%. But if we have a look into Apple again, you can see that this is for the same reason, or largely the same reason, as I'm down on Amazon. I'm currently up over 1% on Apple, however I am down 3.71% when equating to the FX impact. AstraZeneca are a company that I've been fairly disappointed with of late. They're doing a lot at the moment to help with the global fight against coronavirus. However, since investing in AstraZeneca, their share value has decreased quite substantially. Over the last 3 months, they're down around 6%, and even over the last month, down around 1.5%. I currently own 0.4 shares in AstraZeneca at around just £30 in value. And since investing in AstraZeneca, I've seen a rate of return of negative 16.5%. I also invest in AT&T, and this is largely because of the dividend income that I can expect to see from them. I'm down here again around 6%. However, if we have a look back into AT&T, again you can see that my market gain or loss, I'm actually in a positive rate of return, and the negative rate of return overall can again be attributed to the FX impact. So because of this continued dividend and the fact that I know that the US dollar will likely strengthen in the future, I'm very pleased with where I'm at the moment with AT&T. BAE Systems is a new company to my portfolio, and this is largely because of a previous video that I did. In the last video I explored how much Trading 2 and 2 had paid me through the referral scheme, and a few commenters mentioned that because I'm a content creator on YouTube, I could actually apply for an extended referral scheme, meaning that I could receive more than the usual 20 shares through the referral scheme. After applying for this, Trading 2 and 2 retrospectively sent me the shares which I would have received from the referral scheme after the normal 20 where the cap was initially. You can see that I received 28 shares in BAE Systems, currently equating to £142.13, and this is absolutely free cash from Trading 2 and 2 just for people signing up through my account. You can see that since receiving these shares I'm up around 7.5% or just under £10 in growth. Now this would be a company that I do hold on to. BAE Systems were a company that I were looking at and would have invested in anyway. It's a company which will continue to go from strength to strength whilst also providing my portfolio with a nice consistent dividend yield of 4.66%. We then move on to Boeing, which have been, excuse the pun, flying recently, up around 45%, equating to £71. We've then got BP, and I currently own 19 shares in BP. Now the oil industry really has been in turmoil this year. However, in the last 3 months there's been a massive turnaround with both BP and Shell, as you'll see in a minute, going from strength to strength. I currently own 19 shares and I'm up around 3% at the moment in BP. We won't hop in and have a look at BP specifically, we'll do that in Shell in a few moments' time. I own 2 shares in Coca-Cola and I'm up 1.39%. EasyJet again have been going from strength to strength, again with a lot of travel companies, with the likelihood that travel and the world will be opening up to be fairly normal, hopefully in the next 6 months. So EasyJet have seen a really good time. I own 9.8 shares in EasyJet and I'm up 77% at the moment. Facebook, I own 1/4 of a share. Again, we'll hop in and have a quick look at Facebook. You can see that since investing in Facebook, I'm up around 1%. However, if you look at the market gain or loss, again, you can see I'm up 9%. However, the FX impact again has massively changed that, with the FX impact being negative 8%. So again, you can see the strength that a currency deviation has when investing in foreign currency denominated shares. We've then got the iShares Global Clean Energy ETF. Now, this did have a really large rally over the last kind of 3 months. It peaked at around £14 per share, and since then it's had quite a substantial pullback of around 30%, with it currently being sat at £10.49 per share. I own 0.88 shares in Johnson & Johnson, up around 2%. In Lloyds Bank, I'm up around 45%, owning 31 shares. Obviously, these shares aren't valued much each, so it's only around £14 of the overall portfolio. Microsoft, I own just over half a share, and I'm up around 5%. Nikola Corporations are, of course, the elephant in my portfolio. I'm still holding on to them. I don't necessarily know what to do with them. Lots of people telling me to sell out of them, which is looking increasingly likely. However, I am pained to sell at negative 61%. Not too sure what to do with these, so let me know your thoughts in the comments below. I own 4 shares in Realty Income. The main reason for this is because of the continual monthly dividend. I'm up around 1% here at the moment, but the dividend income month on month really does give my portfolio some excellent cash flow, which over the long term, as I increase my position here, will enable me to buy more shares and snowball my investments. I own 10 shares in Royal Dutch Shell and I'm up around 23% at the moment. We can see that over the last year, the share price fell quite substantially just before COVID from around 22 or 23 pounds per share, and then it did fall right below 10 pounds per share kind of throughout the coronavirus lockdowns and quarantines. Since then, over the last month and 3 months, it's increased 10% and 8% respectively. And this is something which hopefully will continue to go from strength to strength. They've begun to start paying their dividend again, which is currently at 9.87%. This probably isn't sustainable. However, the share price has changed quite substantially, and that is largely why it's currently showing a very high dividend yield. We then move on to the final 6 companies in my portfolio. We've got Starbucks, which has had a particularly good time. It's skyrocketed of late, so it's shot up quite substantially since kind of mid-March of last year. Over the last year, it's had a really, really good time, to be fair, since the lockdown. And you can see that it's increased 55% since this time last year. So I'm up currently 13%, equating to around £7.30 in investment return. Tattooed Chef, I'm up 6.5%, owning just 2 shares. Tesla have had a particularly interesting time, as always with Tesla. I'm up 40% on my Tesla investment at the moment. You can see that it's increased massively this year, something which I think lots of people look back on and were expecting a pullback from Tesla, which we did see last week, with it pulling back from around $850 per share down to around $650 or $600 per share at its lowest point. That's since rebounded by $100 per share, with it still being up 550% year to date. We've got Tilray, which I'm up 20% on. Again, this was a free share that I received from Trading 212. Potentially I'll be selling out of this one to invest in a dividend paying company. However, I'm quite enjoying seeing this one grow at the moment. Unilever are another one that I received as a free share. This is currently valued at around £40 per share, and I received 2 of these as completely free shares. So that's £80 that I got given just for people signing up through my referral link. You can see that I'm up 3.8% on that at the moment, and they do pay quite a nice dividend of 2.96%. So I am considering holding on to Unilever for a long period of time and continue investing back into them. This was a company that I had on my watch list. However, I am going to continue to look into this company just to make sure that it's a company I can invest in for the long term. The final company in my portfolio is Walt Disney, which has again had a really, really good year. Since the emergence of their streaming service, year to date they're up 91%. And this could be because year to date is now looking back at when the first lockdown occurred, where it dipped down to under $100 per share. However, it has had a really, really strong few months with it increasing largely in value. I own half a share in Walt Disney and I'm up around 30%. And again, you can see the FX impact has affected the rate of return I can see. Before I forget though, let's just have a quick look at my dividend income. You'll be able to see that today I received 53 pence from Johnson & Johnson, and yesterday I received 17 pence from Starbucks. And that means that my total dividend income from this portfolio in just under a year, about 10 months of opening this portfolio, is £12.35. And if you think about it, a lot of my shares at the moment, or some of my shares at the moment, aren't dividend paying companies, largely Tesla, which makes up a large proportion of my portfolio. So this may be something that hopefully will increase in the future with my dividends continually reinvested to earn more dividends in the future. So with that said guys, upon finishing this video, you can see the total value of my portfolio is currently £2,800.21. However, if we look at the very top, you can see that the current account value is £2,805.91. So there we have it, my Trading 212 portfolio valued at over £2,800 at the moment. As I've said in previous videos, I started my Trading 212 portfolio in May of 2020, just after the initial market crash of COVID-19. Since then, I've continued to invest and pound cost average into my particular investments throughout that time, and this has really enabled my portfolio to go from strength to strength and continue to grow, as you'll have seen in all of my portfolio update videos. There are a few individual stocks and shares that I am considering selling out of and moving towards a far more dividend reinvestment strategy within this portfolio, but of course I'll keep you up to date with any changes that I make and the reasons behind those changes. As always though guys, thank you very much for watching this video. It's been really good to getting back to making videos. I really enjoy the process, so I'm pleased to be able to do that again now. As always, if you do enjoy videos like this, please do consider liking the video, commenting on it, and subscribing to the channel if you haven't done so already for all my future portfolio updates and all things investing, finance and money. If you haven't signed up to Trading 212 yet, why not check out my referral link below. I believe referrals are still locked at the moment, however you can be on the waiting list, and as soon as Trading 212 reopens its registration, you'll be first on the list. If you do sign up through my link and invest just £1, you'll be given a free share valued between £1 and £100 upon your first investment. So it really is free money and it will help you get those investments started. Equally, it's a big week for matched betting. Match betting is a way of making free, tax-free cash every single month. This week is the Cheltenham Horse Race Festival. This means that there's hundreds and hundreds of pounds to be made from bookie offers this week, which can be done absolutely risk-free. If you haven't heard of match betting before, check out one of the videos up above, and if you want to give it a go, sign up through the Profit Accumulator link in the link below and you'll get 1 week for just £1 to see if you like it, and then hopefully move on and make thousands of pounds in tax-free cash through match betting, as I have done so as well. Once again guys, I really hope you've enjoyed this video as much as I have putting it together, and with that said, I'll catch you in the next one.